housing market in September has been seeing higher interest rates, rising inventory, less buyer demand, price reductions, to name a few, nationally. And in addition, today we'll look at home price appreciation and home affordability, which is tied closely, as well as what rising interest rates are doing to them. And finally, we'll tie what is happening nationally to what is happening locally in the three counties, King, Snohomish, and Pierce, so that you have the end-to-end picture, okay? Let's rock. Hey, Ravi with the Rams Group at eXp Realty here. It is great to reconnect, and I am excited to be bringing you this market update. Now getting to it. The interest rates have been trending higher in September, and the average 30-year fixed is now above 6% without points, that is. Now this is due to the inflation, which indirectly affects the Fed raising the short-term borrowing rates, which has a ripple effect into the mortgage rates slowly, making them rise up. Now most pundits nationally come out with their predictions about where we may land interest rates wise, and of all the predictions, only NAR, which is the National Association of Realtors, prediction seems to be closest to where we are currently, as you can see. Now nationally, a few stats may be of interest to you before we dive deeper, okay? More homes are coming on the market with buyers waiting on the sidelines, causing the inventory to increase. And 40% of the active listings on the market have had a price reduction before they sell. Now the number of pending sales, or the homes that went under contract, is down 20%. Showing requests by buyers to visit homes is down by almost 40%, and closed sales are down by 17% nationally. And here's the kicker. Redfin said that in their nationwide survey, 24% of sellers think that it is a good time to sell, and 73% of the buyers think that it is a bad time to buy. And here's news about builders as well. To move inventory quickly, builders are discounting prices by up to 20% overall for the new homes nationally, which is like really staggering, right? Now, not all this news is doom and gloom, right? If you're a seller, pricing your home correctly matters more now if you want to sell, that is, without tracking days on the market. It's more important than ever. And as you know, the longer a home sits on the market, the less it fetches. Now, when the market was at its peak, the asking price was the start, and the bidding went up from there due to the buyer frenzy, right? Now, what we are seeing is, in many cases, the asking price is the upper max, and the bidding starts down from there. Change in buyer psychology. Now, we at the Rams Group strategize the listing, launch, as well as the sale of homes to help sellers net higher prices than the MLS averages. Ask us how, okay? And if you are a buyer, on the other hand, the market is ripe and abundant with opportunities for you to find your perfect home of your choice. And we at the Rams Group, again, can help you negotiate the best price and terms, as we've been helping other clients of ours as well. We can do the same for you. Next, let's look at what is happening with home prices. Where are home prices headed? Now, what we are hearing right now is that home prices are still appreciating, although at a slower pace than how it was happening in the past couple of years. And many sellers are bringing their prices down. Though prices are being brought down, it does not mean that we are depreciating. Now, that said, nationally, we project that home prices will continue to rise, although at a slower pace. Now, talking about home price appreciation, here are the latest home price increase projections for the year. Now, the average of all 7 forecasts is showing about 11.3% annual appreciation for 22. You may be wondering, how is that possible? Now, as we know, most of the appreciation already happened earlier this year, as you know, in the January, February, and March timeframe when the rates were relatively low. Now, experts, however, are projecting that by the end of 2022, there'll be 11.3% increase in the home price appreciation. And why is that, you may ask? Well, that's because inventory is still historically low. And that could be one driver after buyers digest the interest rate increases that are happening. Now, if we look at the data from calculated risk, this helps us compare where we are today versus where we were over the past few years. So if you look at the blue bar on the left, you can see that inventory is 26.3% higher than it was the week ending on the 2nd of September of last year. So year-over-year comparison for the last week of August and into the first couple of days in September, that is a 26.3% more inventory. So more opportunities for buyers and it has helped with the softening of the home prices as well. But compared to the same week in 2020, inventory is still down 5.4%. And compared to 2019, now this was prior to the pandemic, by the way, inventory is still historically low, down 42.2% from where we were in the same week of 2019. So that's what's continuing to drive upward pressure on the home prices, even though at a slower pace, if you will. Next, let's talk about home affordability. Now, looking at the NAR chart, housing affordability right now is lower than it's been going all the way back to the early 90s. The way you read this is, higher the bar, the more affordable a home is. And right now, you see the red bar to the very right, which is at a 98.5, which is the lowest it's ever been. Now, the blue bars in the center show that housing was more affordable during the years when distressed properties dominated the market. Now, after talking about interest rates, home price appreciation, and home affordability, what can you do if you're a buyer? Here are a few recommendations. Okay, first, expand your search area and criteria. Somebody that maybe was looking at buying a home near a city center or in the town may need to look a little bit further out or look at where things might be more affordable than in the area that was their first choice. Second, you could explore alternative financing options. Now, we work with great lending partners who can help you understand what your options are, besides helping structure your mortgage debt. And third, you can look for grants in your area. There are sources like downpaymentresource.com, which you can tap into. Now, looking for gift funds to get into a home and combat rising affordability is another option that you may want to consider. Now, after looking at what is happening nationally, let us tie it into what is happening locally in the three counties, specifically King, Snohomish, and Pierce, shall we? Now, most of the indicators happening at the macro level across the country are trickling into our local market as well. Now, what do I mean? Now, the number of new listings in King County decreased year over year by 13% to about 2,450 single-family homes. Now, the decrease in new inventory was more like 18% year over year in Snohomish and Pierce counties. Now, it is true that more homes are sitting on the market with not enough buyers to scoop them, as well as sellers staying put. Now, this has caused a dip in the number of new homes that came on the market. Now, it was also interesting to note that the number of new condos that came on the market decreased by almost 13% in King County. However, the number of new condos that came on the market increased in both Snohomish and Pierce counties. Then let's move on to pending sales for homes, which is the homes that went under contract. This could be homes as well as condos. Now, this decreased by almost 25% in King County, and a similar number was observed for condos as well. Now, with more inventory staying on the market, it is understandable that this number decreased. Now, moving on to how long homes sat on the market before going under the contract, that is. Now, King County saw a 60% increase in the number of days from 12 days to 19 days. However, both Snohomish and Pierce counties, the number of days before which homes went under contract increased by more than 100% to be at 22 days. Now, it is expected that with a shifting market, homes sit longer in outer areas like Snohomish and Pierce counties compared to King County, which we understand. Now, we talked about homes appreciating less, however, not depreciating, correct? Well, the median and the average price increases year over year increased by about 5 and 3% respectively in King County. Now, one interesting observation though is that in Pierce County, condos median and average price increased by 16 and 25% respectively. Yes, condo sales in Pierce County was more robust in the other two counties. Then let's move on to percent to list price received for closed homes. And this decreased by about 4 to 6% for homes across all three counties. Now, this is caused due to buyers having more options, which increases their negotiating power. And sellers who are motivated to sell are making price cuts for a quicker sale. And the thinking is that sellers don't want to wait for long for the interest rates to trend higher for more buyers to get on the sidelines. So they're just jumping into action. Then let's move on to the inventory of homes for sale, which increased across all three counties. In King County, rings in at about 106% increase year over year. And all three counties saw similar increases in the number of homes for sale. And here is the mother of all, the months of inventory. For King County, there was an increase of 166% in months of supply of homes year over year. Now to refresh, months of inventory is how long it'll take homes which are active on the market to sell, assuming no new homes came on the market. Okay. And I have included the data for all the 3 counties, King, Snohomish, and Pierce counties below for you to slice and dice. And if you have any questions, I'm always available to get them answered for you. Okay. Hey, as always, hope you found that information here useful. And if you did, consider subscribing and hitting that like button. And I hope to bring you relevant as well as timely content and keep you in the real estate know. Hey, well, that's a wrap for September. Next month, we'll officially be in fall of 2022. And it'll be interesting to see how things shake out. Now, I am keeping an eye on the market for you and shall keep you posted. Until next time, you stay safe, and I will talk to you soon. Bye-bye.